All right, now moving from the geographical focus to some outstanding companies in the market. I got 8 slides to present you, which is quite much. I'm gonna go through some of them a bit faster. If there's still questions, just drop them in the question section. And by the way, I'm gonna have way more tables than beautiful charts as Ron, so it's not as visually pleasing, but bear with me. So first of all, this is always one of the highlight slides for me, at least. We're going to have a look at the top 10 funded companies in this year, in 2020. And I'm going to mention 3 things about this top 10 list to you. Number 1, we only have US and Indian-based companies on here. We did not have that before. Yeah, it's only US, only India. There's no China, no Europe. Very interesting. Ron gave a few indicators why that could be. What we also like seeing is that we have 9 deals that were over 100 million US dollar or more. That is more than last year. And this is in a year of a pandemic, right? Very interesting. And just speaking in themes, so which were the hottest topics of the year, one is like a no-brainer this year. That's the answer for everything. It's fitness. 6 out of the 10 investments are from the fitness industry. And the other hot topic, Ron mentioned it before as well, was fantasy sports in cricket with 2 big funding rounds. So 8 of the 10 are either fitness or cricket. And the leader for this year, just to mention it, is Swift, with by far the biggest funding round with 450 US. That's about this chart. Before I come to the next one, it's poll time again. So I'm going to shoot out another poll to you guys. And the question is, because we're going to see it on the next slide, obviously, which month in 2020 do you think saw the most funding so far? I'm curious if you can guess that. Maybe it's people who anyways have seen the report, but I want you to guess. I mean, you could say, hey, maybe that was before the pandemic, before everything went down. Maybe it's coming out of the pandemic. Maybe there were some surprises during the pandemic. Who knows? Your turn there. I'm going to give you a couple more seconds to answer that question. Okay, answers are trickling in. Don't see much movement there at the moment. Okay, I think I can move on. The fact that you were right actually tells me that you all have read the report already. So this is a new slide, and I really like this slide, I have to say. I'm happy that we included this. The month of September was insane in sports tech this year. But let me walk you through it. I mean, obviously, at the beginning of the year, COVID was not such a big topic yet, and we saw a really good month in January. We had over 500 million US in investment with ClassPass and Barstool Sports leading the game. So this started off as a promising year, and we were super confident that this is going to be a record-breaking year if it's going to start like this. But then you see a hard drop in February, and that hard drop, I mean, it didn't get much better basically all over the summer. So February, March, April, May, June, July, August, yeah, some months were better, some not so good. But it took until September when we were like, when summer was coming to an end, when we were like seeing the first hope of maybe having a vaccine or something, then investors took out the checks and distributed the money all over the place. And you can see there, it is a month with over 1 billion US in investment. This is unparalleled. I think it was the biggest investment month in, I think it was 2015. I forgot the exact date, something like this. And also October was again really strong. So one thing we want to highlight here is that out of the top 10 deals, so the 10 deals that you've seen on the previous slide, we put on this timeline. Out of from the last 2 months, 6 out of the top 10 deals were made only in the last 2 months, sorry. And I think this is amazing to see how sports tech is coming out of this pandemic. There's really hope. People or investors think that this industry is legit, and yeah, like I said before, they take out their checks and put the money all over the market. The question though is, where do they put their money in? And also here, it's not going to be a big surprise. fitness is definitely a big thing. So out of those 6 deals in the last 2 months, the 6 big ones, 4 of them went into fitness. Swift, I mentioned before, Tonal, Icon Sport and Fitness, Whoop, all fitness devices or communities, big investment rounds there. And the other 2, we keep mentioning them, is fantasy sports cricket, connected to the start of the new IPL season. I think that's it from this slide. So great comeback of sports tech, and only the last 2 months, I think it's important to understand, brought us back in this year and secured like really good numbers for the overall year. On to the next slide. I'm gonna keep this a little bit shorter because, like I said, there are 8 slides in this chapter. These are the top 10 all-time funded companies in sports tech. One thing I wanted to highlight is that also here by now we see fitness dominating the market. So fitness is the sport or the theme that is represented the most in the all-time top 10. The other interesting thing is, if you go through them, that all of the deals but one are from the US and from China. There's only one company, which is CureFit, of course, fitness, at position number 10, which is from Bangalore, India, which is breaking into those big dominant players with the US and with China. The other thing I want to highlight is that from the top 3 deals, we have 2 deals that actually have taken place in 2016. So we see some sort of legacy deals still in that list. So we think it's time for some new really cool big companies to jump on that list and hopefully take the lead there. Next slide. This is also a very popular one. It's showcasing all the unicorns in global sports tech. Again, a few things that we want to highlight. First of all, this list grew from 15 to 19 companies this year. So we have 4 new entrants. The 4 new ones are Swift, ClassPass, Whoop, and Keep. So welcome to this exclusive club. The other interesting thing is that from these 19 companies, actually 17 are consumer-facing companies, B2C companies. So this is probably a clear indicator where the money is made in the industry. And out of the other 2, which by the way are BAMTech and Sportradar, those 2 are actually B2B2C companies, so indirectly also consumer-facing. So the outcome pretty much is in B2B, it's really, really tricky to raise a unicorn. The other interesting thing is that, I mean, clearly the US and China are the 2 dominating markets, but there's also hope because in Europe, we have 1 unicorn with Sportradar, and in South America, we have 1 unicorn with Gympass. So it's not just USA and China, but also 2 other geographies. And we also like to take a little bet on the next year, who's going to be the next unicorn, or as we call them, a Sunicorn. We believe that India, oh, by the way, I forgot to mention, India is another country that has exactly 1 unicorn. We believe that CureFit in India is going to break through that unicorn wall or valuation soon. I think right now they should be valued around 800 million, so there's not much left to break into this exclusive club, like I said. That's it for the unicorn slide. This is actually very interesting. It's showcasing the top acquisitions in sports tech since 2015. And on that slide, we see a couple interesting themes or topics. The first, and this was like a mega deal this year, was esports streaming giants Huya and DoYu doing a big merger with a deal value of $10 billion US. So this is a massive, massive deal that's supposed to make them even stronger as they've been independently before. But another interesting thing to highlight there is that this is really beneficial for Tencent, because Tencent, who already is the biggest company in esports and gaming by revenue, will own 2/3 of this new mega company. So as we think, good times ahead for Tencent and that new merger, out of which Huya is gonna be the one company or brand that's gonna be kept. So besides esports streaming, the second topic that we've seen like really, really big this year is betting, and especially the deal of Flutter buying the Stars Group this year or last year. Remember that that Flutter is the merger of Paddy Power and Betfair. Yeah, so already big betting companies. And last year, Flutter bought the Stars Group, who is actually the acquirer of Skybet, so not a huge betting brand. So that deal happened last year. The interesting thing this year is, because they already post-IPO, they have collected another $1 billion from Fox Inc. to further grow, and of course, especially in the US betting market where everybody sees the big gold rush at the moment. So betting is definitely another really big topic that we see emerging. Number 3, of course, in the fitness industry, that you're going to see on every slide, fitness is included. In the fitness industry, we've seen a bunch of deals as well. You've heard it, Lululemon acquired Mirror, the smart mirror, lots of smart mirrors there at the moment. We have seen the merger of F45 training with Crescent, and very interestingly, Under Armour, after buying MyFitnessPal 5 years ago, they sold it for a discounted price this year to Francisco Partners, officially saying to focus their brand because they're more on like top performance, or they're more top performance oriented. But some might say, hey, now with Apple coming into the segment with Fitness Plus, maybe this is not the best market anymore. So yeah, official statement is focus the brand of Under Armour. Yeah, this is the top acquisitions since 2015. Next slide. This slide is going to be a bit faster. We also like to list the undisclosed acquisitions in sports tech. Here, obviously, we can talk numbers, but we at least want to highlight some of the acquisitions that took place and only took place in 2020, only this year. And without going into too much detail, we think most of those deals have been strategic deals in 2 ways. Either it's securing core IP, let's say on this slide, Spotify acquiring The Ringer to have those exclusive rights, or, and here the example would be ClassPass, going into other markets by acquiring companies in that market. And ClassPass has been active in acquiring MuffPass and also ClickyPass this year, making sure that they're also big in some other markets. And last but not least for this chapter, we have a slide. Oh no, we have 2 more slides, sorry. This slide is about the notable IPOs in sports tech since 2015. So of course, we also take a look at the stock market and what's happening there, because this is ultimately the end of the funnel, right? This is also why on the top funded companies all time, some companies don't move anymore because they don't get funding anymore. They enter IPO stage at some point. And we want to show you the entire funnel, and this is what we're also showing, the notable IPOs. A few things to highlight here is, of course, to start with, the big winner of the year, Peloton. With the massive at-home fitness trend, it's obvious that Peloton had a good year. And compared to last year's report, which is approximately the same time of last year with a two-week difference, Peloton grew over 300% and has now a market cap above $30 billion US. This is definitely like the ultimate best case that sports tech or fitness tech has brought up. But also, again, betting is strong. DraftKings is 1 out of 2 notable IPOs of this year, next to FuboTV. DraftKings, who have not been listed last year, now are valued more than $30 billion US. Definitely, yeah, due to the fantasies that are there in the US betting market for sure. Of course, I just mentioned a few slides before the big merger between Huya and DoYu. So Huya is also on the stock market, increase of 8% since last year. But yeah, we're going to watch them closely and see what development is going to be out of that merger in the next 12 months. And same as with the unicorn chart, we also want to make a little prediction who of the existing companies might go for an IPO next year. And our best and probably obvious bet here would be Swift. They already collected 450 million this year. We believe with the big trend in at-home fitness, Swift is the natural candidate to jump on that list next year. We will see. One very last slide for me in this chapter. We are also curious to see who is actually investing in SportsTech. So who are the investment companies behind? And I mean, we have over 4,400 deals in our database. So we always have to think, okay, how can we showcase this? How does it make sense? What is the most valuable information out of this? So we said, hey, let's only look at deals, that's important to say, that are 10 million US or above. So all the deals that you see listed here, and we listed a number of deals for each investor in 2 columns, are only deals of 10 million US and more. And the other thing to highlight before we come to the names a little bit is that these are only deals made in SportsTech per our definition of SportsTech, per our framework. So Sequoia, Tencent, Excel, they have made more than 16, 14, 13 deals in the last 5 to 6 years, right? So these are only the ones above 10 million and in SportsTech. And just to highlight a few things, if you look at the headquarters again, you see the US all over the place. So out of the top 15 investors, 13 are actually from the US, 2 are from Asia, with 1 in China and 1 in Singapore. Sequoia is leading the field with 16 deals in 2015 to 2020. And 2 other ones that I actually want to highlight here. It's number 1, it's General Catalyst. They have made 9 deals above 10 million so far, but 5 of them have been this year. So 58% of their SportsTech deals this year. They have definitely been not afraid to invest in times of a pandemic. And the other one that I want to highlight here is L. Catterton. Also 3 of the 8 deals, so 38% in this year.